Okay, pardon the awkward microphone here, guys. We have one microphone. It's a lapel mic, and we got two of us. So we're going to just pass this back and forth. But as long as everyone in the back can hear me. Haley, we good back there? Excellent. Thank you very much, Haley. Haley's a member of our You Can Trade team. Over here we also have Michael and Steve. They're going to, they have already passed out cards to you. So they'll have questions about stuff at our general services at the end. And Neil and I, we're going to take questions throughout. I've been to enough Traders Expos, both sitting where you are and a couple standing up here. I know these things have a tendency to go completely off the rails 5 to 10 minutes in. And I want to say that is okay. We're going to pause every section to take questions about the various things that we're talking about. And at the end, we've allocated enough time to go over questions. And I'm really excited having followed the gentleman from Fidelity because I was listening to a little of his conversations while I'm talking very specific trade type things, very specific trade setups. That's great. That's important stuff. One of the things we do at You Can Trade is we are a company founded by retail traders. Everybody who's in the room, myself and Neil, we cut our teeth doing retail trading. There's a lot you can learn from retail traders. If you're a retail trader, there's a lot you can learn from floor traders. A broad variety of education is very, very important. I got my background in education. We're going to get a little bit into that once we talk about our introductions. And our introductions play into some of the opening things we're going to talk about, so we will get into that. But just for now, my name is Matt, this is Neil. You'll learn a little bit more about us as we go on. First of all, our standard disclaimer, the following presentation is for education purposes only. No offer or recommendation to buy or sell any security. I'll let you read the rest of that. I do highly encourage you if you have not checked out the Options Clearing Corporation pamphlet. I'm sure you've all seen it at some point and probably ignored it. I highly encourage you to read it. Some great information in there. Just really understanding what we're doing. We're both predominantly options traders, got our start trading options. So, again, understanding the risk is obviously very, very important. So we're getting into today specifically trading psychology and trade evaluation. We're calling this a view from the air and the view from the ground. We're going to take first a view from the air, a view of your overall trading career. What do you have going on that is working for you, that isn't working for you? How do you evaluate that? And then we'll do a view from the ground. We'll talk about how you evaluate specific trades, specific days, specific weeks. My channel at You Can Trade is called Two Roads Trading. One of our themes is we say 1 week at a time, 1 day at a time, 1 trade at a time. Of course, we have more than 1 trade on at any given time, but the point is we're taking this 1 step at a time. So I have a question for you before we get into this. How many people in the last 2 weeks have seriously questioned their decision to get into trading? Okay, yeah, several hands up, and the rest of you aren't being honest. So, but in all seriousness, it's been a really good week for those of us that like to trade volatility. A couple of weeks, especially for some of our contrarian traders in the room. It's been exciting, guys, and it's been great. And for those of you that are fairly new to trading, it's been unlike anything you've ever seen. I've been trading about 7 years now, full time, and it's unlike anything I've ever seen. So, who knows what Monday is going to bring, and that's one of the best things about trading. I can't tell you what's going to happen on Monday or Tuesday or Wednesday. I'll tell you I'm going to be ready for it, and I'm going to be ready to react to that, and we'll get into that in a little bit as well. But one of the things we got to talk about, I want to make sure we're all on the same page with trading in general. When we get into very complex topics in anything, we get into mathematics, we get into economics, we have to start with at least agreeing on some of the basics. That's obviously more and more an issue in various layers of our society right now. People come to any kind of major societal problem from completely different angles, completely different belief systems, and they clash. So I just want to kind of tell you where I'm coming from with everything so you understand where we're going to go throughout this talk. First of all, guys, trading is different. It presents a unique set of challenges and opportunities. It takes a unique set of mental skills. Do we have any Mark Douglas fans in the room? Oh, yes, you people, you guys are my favorite people right now. I like all of you, but I really like the people that are Mark Douglas fans. Anyone not know who Mark Douglas is? Okay, most people do. He is he's probably one of the foremost trading psychologists. I believe he actually passed away a few years ago. But he was, his book, The Disciplined Trader, he's got The Disciplined Trader, Trading in the Zone. They're similar. I mean, they're both worth a read. But The Disciplined Trader, when everybody asks me what's the one book to read on trading, there's a lot of great ones out there that talk strategies. Sarah Potter, our founder and president, she's actually doing a book signing tomorrow, literally wrote the book on trading options. That's a fantastic book. But no offense to our boss, if there's one book I recommend, it's The Disciplined Trader by Mark Douglas. Outstanding book. So those of you that are familiar with him, you're going to hear some parallels in what I do, in what I talk about. And those that, if you again, we have a 2-week free trial in our trading room. If you step in there and hear me talk on Tuesday, you will hear some of the very same things that we talk about again and again and again. Now, here's the thing. Trading differs from most any other jobs in terms of time for potential for risk and reward. When done right, trading can be simple, but it is not easy. And this is something that as I work with individual traders, I find is extremely difficult for a lot of people to grasp. Sure, trading is and can be very complex, okay? But to me, I practice the KISS theory. Keep it simple, stupid. I like to consider myself a smart dude. I'm not the smartest in the world, and I'm successful at this, which leads me to believe almost, the qualifier, anybody can be as well with the right time and the right background and the right education. And the potential gain and loss every day is just, it's astounding. This is one of the things that Mark Douglas talks about, specifically in The Disciplined Trader. We're used to, how many people in this room, and I know we're going to see just about everyone, have had a job where they've made money by the hour or by the year? A salary job or an hourly job? It's pretty much everybody. Okay, I have too. Yeah, thanks, Mike. That was well timed. You go to work at let's say you're flipping burgers, $8 an hour. You work a 10-hour shift. You know at the end of the day you're going home with $80 before taxes. I understand. If you have a salary job at $75K a year, as long as you don't get fired and meet your job responsibilities, you're at the end of the year you're going to have $75K, not counting taxes. I have to say it every time somebody goes, "What about taxes?" Come on, it's an exercise. So, but with trading, it's completely different. Okay, you can have a $1,000 account and double it in a day. Now, you're probably taking some risks you shouldn't be taking doing that, but that's not this talk. You can make and lose almost anything that you want in a given day, again, risk management, et cetera, et cetera. But our brains are not wired for that if we've worked in a salary job for 20, 30, 40 years. I've worked with people in their 70s that are just starting to trade. They have a grasp of the financial markets, and they kind of understand the basics, but as far as they understand investing, they don't understand trading. And to rewire somebody's brain, especially somebody who's been successful in whatever field that they've been in, is very challenging. Sometimes younger people can grasp that aspect a little better, but it's some of the other issues that they have problems with. Okay, so every trader will also have a unique experience, okay? In just a couple of minutes, Neil's going to talk all about how he got into trading and a little bit about his philosophy and how he trades. Then we're going to kick it back to me and do the same thing. We are completely different traders. We'll get into that. You're going to bring your own skills, mental strengths and weaknesses, and style to your trading. This is true of every session, of every trade, every new strategy you learn. How many people are currently learning a new strategy? New trading strategy of any kind? Okay, well, you're at this conference, so you're obviously in the learning mentality, which is one step ahead of a lot of people that I know. So learning all of this and adapting it. Most of my swing trading strategies that I teach in my course, they're rules-based, and they're adaptations of stuff I've learned from other people. Okay, the next strategy that you learn, whether it's at this conference, you go home, watch a webinar, you pop into either of our trading rooms, and we're talking about one of our strategies. To just cookie cutter it to you, I mean, we teach them with that idea that you can have success, but at the same time making them your own, taking a daily strategy and flipping it onto an hourly chart, adding an extra moving average or an indicator. These are the things that have to be done day after day, week after week, to literally have that mental edge that is so important in trading. We talk about the trading edge. You have to have that. That goes without saying. But so many people learn all these systems with an edge, go out and trade them and don't have success with it, and then they come to us and wonder why. And usually that's a very quick diagnosis where we can say then, okay, well, what have you done to make this system your own? There's no right or wrong way to trade, only profitable or non-profitable. We have a lot of people in this room right now. I know a lot of people here probably trade stocks, options, futures, Forex, crypto. And there's probably at least one person, if not many more, who are profitable in every one of those trading instruments. There's probably people that are not profitable in every one of those trading instruments. So there is no right or wrong instrument to trade. There is no right or wrong system to trade. There's only profitable and non-profitable. And again, that's something that some people don't always come to early on. I didn't, but I'm probably I'm just going to serve. I'm probably the most stubborn person in this room. If I'm just eyeballing you guys, I am a hard-headed dude, and I've got references. If you want to hear that, parents and exes and all that, I got references. So it's you guys know what I'm talking about. So it's if I can kind of pull through a lot of this stuff and break down some of these mental barriers, you guys can as well. And to illustrate this point, I wanted to get into talking about two traders and two stories. And for that, I'm going to introduce my friend Neil Szczepanski, and he's going to take you through how he got into trading and how he trades.
Hello, everybody. New York City. How many people traveled in tonight or this afternoon? Quite a few. So I traveled in this morning. I have 6 kids. My name's Neil Szczepanski. I have 6 kids at home, and my wife, before I left, she said, "Don't get the coronavirus." So I'm sure that's on everybody's mind. But I saw an ad on the way in here that it said, "Man with coronavirus seeking woman with Lyme disease." I'm in New York City. I'm trying to do comedy, but that's why I'm not a comedian. I'm a trader. Just to give you a little background on me, so I started trading in the late 80s. It was junior achievement class. They came in, they gave us an account, and we learned how to trade. I fell in love with it at that age as a kid. In the late 90s, my father ended up purchasing a options trading course that he never listened. It was cassette tapes. I devoured all those tapes up and learned how to trade options at a very young age. I've been seriously trading since the early 2000s. I just love trading. I think there's a lot of freedom with trading. For me, it's my trading style is one of, I always try to set up my trades where I have the least amount of chances to lose. I do a lot of statistical probabilities. I use expected moves, things like that. For me, being disciplined, learning a system and learning new strategies has helped me along the way to become a successful trader. My background is in tech. I used to start off as a coder, developer for many years, and then moved up into senior and executive level management, and now I'm a full-time trader. So that's kind of my background. Been doing this for quite some time. I primarily sell options, usually selling options with I tend to look at the IV rank. Volatility has been great, as Matt said, lately. So for selling, it's been very good. But you can't always do that. You kind of have to change as the market changes. And I always say, when I was in tech for many, many years, I always said technology moves at an exponential rate, meaning what you experience today or the next 2 years will be more than what you experienced the last 10 or 20. I think trading is very similar to that. You got to always be thinking ahead. You got to always be looking at new strategies. You got to be changing with the market. What you did 20 years ago may not work going forward. There's algos out there now. It's changing the way we're trading. So you got to be aware of all those different things. But for me, that's what's made me successful over the years. And I have a background. I went to school in economics. So I have an economics background as well. So Matt's going to give a little background on him.
Neil coming with the dad jokes. I love it. So a little bit about me. Is there anyone else here who can speak a complete sentence? No, who got into trading or got interested in trading because of the subprime mess in 2008? Anybody? Okay. How many people since then? So it's a lot of newer people in the room? Okay, so you all been trading for 30 years then. That's great. So basically what had happened is I went to school. My major was sports management, and I had a business and economics background, public relations, the whole thing. I wanted to be an agent. I wanted to be a sports agent. And I started kind of going down those paths. Actually got into coaching a little bit, started working with in adult education, working with people who were going back to school to get their GEDs and or high school diplomas. It was kind of one of those weird things. Just a couple opportunities came up. I loved it. Anybody here a teacher or ever taught before? Okay, not the most lucrative field, which I think is ridiculous, but that's just me. My mom was a teacher for 40 years, so I got my love of education for her. My dad worked in athletic administration for many, many years. And so about 2008, right about when things were kind of starting to roll over and getting towards the end of 2008, 2009, my dad's mom, my grandmother, started to have dementia, and she passed away. So my dad goes down we all go down, we have a funeral, we're helping get everything rearranged and get her affairs taken care of, get the house, the estate sale put together. My dad and his brother found an account that she had with the local, I don't know which broker he was with, but it's one of the small town money manager guys who had managed her affairs for like 30 years. Did a great job with it. I mean, he was very good. Always kept it so she was fine. And she was getting towards the end. The house was paid off, cars were paid off, Medicare was covering all of her expenses. So she really didn't need to dip into that too much. She hadn't touched it in a couple of years. So my dad and my uncle go down and meet with this guy. Again, real nice guy that he's known them since they were, this tall. And they had their retirement accounts. They'd seen some ups and downs, but it'd been a while since anyone had saw what happened in 2008 and 2009. So they go in there and see that the account was down, like 10, 12%, something like that, which obviously was less than the markets, but still a big amount. And so as they're looking through this, a light just kind of went on in my dad's head. It's like, listen, I know this is the way things are. I pay someone a fee to manage money for me or my mom or whoever, but he was raised by a World War II veteran, very, very old school guy. You eat what you kill, you earn you earn your keep, et cetera, okay? And so that's kind of how he raised me as well. And so he's looking at this guy and going, I just paid this guy money to lose money for me. And I know the markets went down, I know there was a bubble that popped, I know all that, but I just paid this guy to lose my money. I can lose my own money. I don't need to pay somebody to do that. So that started my path. And at the time, I was kind of going through a little bit of a career change as well, where I was becoming very unsatisfied with what I was doing. Again, physically pretty rewarding work, mentally exhausting, and coming home at the end of the day, again, like a lot of people out there now, where you're doing math on the back of you're sitting in a restaurant with your family and you're doing math on the back of a napkin. Can I pay rent next month? And that was so we were kind of going through all that, at once. And I was in my mid-20s, and to be honest, my parents were helping me out with a lot of stuff, and I wasn't really happy with that. And so we began to kind of look into this. And again, you take somebody like me who even at 38 is extremely stubborn, and now put me back in my mid-20s, and you get what you're looking at. There's more hair at that point, but still the point stands. And so I started getting into trading. I got really into it for about 6 months. Didn't make a single trade, but got really into the learning. Was going to all the traders expos. I live just outside of Chicago, so there's always, you walk down to the Loop in Chicago and throw a thing of pennies in the air. Well, first of all the traders will come collect them when they hit the ground, and the second part of that is you'll hit 5 trading conferences. So there was always something to learn. I love learning stuff, guys. I love that. I love learning a new strategy, digging into, obviously, as you know, trading psychology is a big thing for me. So I was digging into that, and I said, I got this. So I did what I now never advise or recommend anybody to do, especially those that come to me for any sort of trading advice. I quit my job and became a full-time trader. Yeah, that gets a laugh. Okay. And it should. So yeah, no, I was I'm in my 20s. I got this, right? I got this. I'd had my ups and downs, but really at that point had yet to experience a whole lot of like life adversity. Sure, some first world problems, but other than that, it was like, okay, I got this. So, the markets, they kicked me in the teeth. I was going to use a different expression there, but we are streaming here, and I don't know who's watching on the other end. I don't want to swear. But yeah, the market said, oh, you got this, huh? Okay, I got something for you. I blew up, not my entire account. But I blew out a good chunk of a $50,000 account in about 4 months. So I was that guy. Anybody in here been that guy before, or that girl? Yeah, we've all done it. Thankfully, I had enough to stay solvent, and I did have a little backup savings. But at that point is where I kind of went into, I don't know everything. And there's always something else to learn, and I need to get my you-know-what together if I'm really going to do this, or I'm going to be right back where I was 6 months ago and very unhappy. So I started, actually it was a recommendation of a friend of mine. That was where I stumbled across a few books. One was The Disciplined Trader, and I got really into doing what I've done. I've met a series of mentors over the years, some that used to run like mentorship type services. They've since retired, and then my current supervisor boss, Sarah Potter. And so through kind of that combination, I kind of became an amalgamation of those traders. I day trade the first hour of the markets. I typically trade stocks, and then I swing trade options. And we opened our live trading room in November, and we've been doing pretty well in there. So with that in mind, we're going to get to the first little part of our talk here, a view from the air. And for the first couple slides of this, I'm going to turn it over to Neil.
I'm back. All right. So I just want to, before I start here, so how many people, I'm just curious, how many people out there have actually bought stock high and then sold it low? I think everybody has done that. I've done that so many times, I can't even tell you how many times. Learning, that's always the philosophy. So, but that is one big mistake that we make as traders. And it's an easy mistake to make because you get emotional and you're like, oh, should I sell? Should I keep? What should I do? So what I've done over time is I've actually looked at what's going to make me successful. And, a lot of this, I did myself. A lot of it, I've read books on it. I've kind of put this together. So when I first started, I figured out that you're going to make mistakes. In our trading room, we call it the School of Hard Knocks. Especially if you're trading with real money, you're going to make mistakes. But the key piece is you got to learn from those mistakes. So what I did is I actually looked at all my failures and I tried to learn from those failures. I think we as humans, that's how we learn. We make mistakes, we figure out what we did wrong, and then we learn and we learn and we learn. It's the same way, as I mentioned, I have a tech background. So when you talk about machine learning, you have what's called a feedback loop. And it's just a loop that goes around and around. It keeps learning and learning. It'll make a mistake and it'll learn from it, make a mistake and learn from it. And that's how they feed a bunch of data into these AIs, and that's how they learn. Well, humans learn the same way, same methodology. I found that if I took my failures or my mistakes and I actually went back and looked at it, that's how I made progress. That's how I got better at what I was doing. So I think as you go through and you learn from your mistakes, you got to make progress by adjusting and not doing the same things over and over. I think all of us together as human beings, which is a little different than if you talk about AI. I used to do a lot of speeches on AI. I was one of those SMEs on artificial intelligence. But we as humans, it's a little different. We have a little different mindset that you don't really get with an AI, and that's being able to logically comprehend and understand what we're doing. So this is kind of what I look at. I also I look at when you want to be successful, you got to be a dreamer. You always have to have those dreams of this is where I want to go, and sometimes they can be far-fetched. I know growing up, my next door neighbor, he actually wanted to be an astronaut, and everybody laughed at him, and he was real close to being an astronaut. He didn't quite make it because he was too short. But you got to have dreams. You got to have dreams out there. If it's in trading, if it's in anything, this applies to anything in life, not just trading. But if you take your dreams and then you apply reality to it, because you got to have a sense of reality. If everybody wants to be the president of the United States, that just may not happen. Or if you want to be a comedian, like me, I want to be a comedian, but I can't because I'm not good at it. You got to put reality in there. And then to achieve the success, you got to have determination. So one thing I did not mention in my intro, I actually I did a lot of sports when I was younger. So I was very competitive. I was very determined. I learned at a very young age not to give up. For me, I had the determination to make sure that I was going to be successful. When you apply this to trading, it can be anything. It can be, do you have too many drawdowns? Do you have, do you have a high winning percentage? What is your overall profitability? You can apply it to all those different things in trading. But the key piece is you have to define what that is, and you have to stick to it. You have to stick to your plan, and it's very systematic. So when I used to develop programs and code programs, it was very systematic. Well, that's the same way I approach my trading. It's very systematic. So Matt's going to talk about a couple things here on the business plan.
First of all, let's pause. Any questions? Any questions on anything we've talked about, anything in general that anybody may want to bring up now? You get a new one. Yes, ma'am. Go ahead. The Wi-Fi? I don't have the slightest clue what the Wi-Fi code is. No. No. Well, I'm 0 for 1. It was open some minds today, but no, I don't. I have no idea. Okay. This is one of the things that I think doesn't get talked about enough. You have to treat your trading like a business. Okay. Neil, let me ask you a question, my friend. Okay. If I came to you today and said, Neil, I got a business idea. I want 25 grand. We good?
I would have to ask a lot of questions.
Just like that, man. All right. Okay. All right. So anyway, but seriously though, I say that, jokingly, but at the same time, first of all, we've all had somebody ask us for money at some point or another, especially when they find out you're trading. They don't even need to know if you're successful or not. I mean, after those few months where I blew up my account, I had people say, "Oh, you're a trader, huh? Let me tell you about my business idea." It's I guess it's kind of part of the world, but you almost have to have a little bit of an inner dialogue, okay? I don't want to say talking to yourself because that has kind of a negative connotation, but you have to approach yourself and say, all right, I want to take this 25 grand, this 10 grand or 5 grand or whatever the case may be. I want to trade. Okay? Well, how are you going to do that? Okay? I made that mistake. I put all this money into what was it? I think it was an E-Trade account at the time. And I bought the first trade. I bought Apple. Well, why did I buy Apple? Because it's going up. I mean, it has since then, of course. But I didn't have a system. I didn't have any sort of real plan for this. Has anybody ever worked as a manager in any kind of business, whether it's a restaurant, whether it's an office business, anything? Okay, so a lot of people there. Okay, if somebody comes to you with an idea for something new, it's great. You encourage that in a healthy business environment. Okay, but without any sort of breakdown of how you're going to do that. In a business plan, you're going to have liabilities, you're going to have risks, you're going to have a plan for how you're actually going to become profitable. Me and a couple of friends of mine, we used to do some advising on specifically the restaurant business because my friend owned a company that managed about 4 or 5 restaurants, and he did a little kind of consulting work on the side. So when somebody would come in, they'd say, all right, I want to open up a burger joint. My hometown, and I'm not counting the fast food places. My hometown, and I live in a town of 30,000 people, has 6 burger joints. Okay, now they're all very good, but there's a couple you go into, and they just haven't distinguished themselves. They haven't, sort of taken that extra step. They didn't have a business plan. They didn't have a way for how they're going to become profitable. Anyone here ever done a SWOT analysis or done Strengths Finder, which is something a lot of corporations are doing now? Okay, so a SWOT analysis: strengths, weaknesses, opportunities, threats. What are these for your business plan? Okay, one of my opportunities when I first started, I had all the time in the world because I quit my job. I had all the time in the world. That was a strength. It turned out to be a weakness too. But again, without having that semblance of understanding the world you're getting in, it's very difficult. You also need constant personal evaluation. We kind of live in a society right now. Any Houston Astros fans in here before I go off on this? Oh yeah, I'm sorry, man. We live in a world, and I don't even need to get political as far as party, but we live in a world now where like being honest with yourself and being honest with others is kind of not at a premium right now, right? It's very easy for us to isolate ourselves in whatever type of environment we want that makes us feel good. Okay? I mean, it's a whole different branch of psychology that I don't have time to get into tonight. But if you're not making money, it's not the market's fault. And I did that. I was that guy saying, oh, well, it's just the market conditions weren't right. I didn't have a plan. I didn't know what I was doing, and yet here I am blaming somebody else because that's just kind of was the environment. Okay? The beautiful thing about the market, and again, this is a whole trading psychology topic as well, you get instant feedback. You instantly know, and listen, I understand there are trades where you can do a dumb thing. You can chase something up 20% and it goes up another 20%. Even though that wasn't a smart play, I understand that that can happen. But generally, if you're chasing things up 20%, you're getting your butt handed to you day after day. Again, take it from somebody who knows. Chasing small caps was the thing I love to do. And I know that's a gateway drug for a lot of people in the market, is those small caps, because those things are sexy, but my goodness. I trade almost exclusively options on large caps now, and I've never been happier, or I never sleep better at night than I do now. Never stop learning. I'm not going to spend a whole lot of time on this slide, guys, because you're here. Okay, so this is something this is actually a slide I took right out of my course. And so obviously it's, you guys are here. Trader development time. I said this in our room, in my live trading room last week, because there was a couple people that were very frustrated with the markets. They were trying to time the bottom. Okay, anybody trying to do that the last 2 weeks? We've all done a little bit of it. I mean, a little bit is okay. If you got one long position, but you're playing the trends the rest of the way, it's okay. But in general, there were a lot of people trying to, especially retail traders, trying to time the bottom last 2 weeks, really. Okay. What I would tell those people, I'd say, listen, and one guy brought up a great point. He says, well, if I'm not trading, I'm not learning. And I said, well, A, that's not true. B, you can always just paper trade and try some of these systems, and then you can see you getting your butt handed to you. Okay, but the other thing is where you can take what I call, we heard the expression, now I'm taking a mental health day today, or I'm taking a personal day, sick day, but you're not really physically sick. It's okay to take a trader development day from time to time. If you go back to the markets next week, and there's a day you sit down and you say, gosh, I don't know what the heck is going to happen today. Maybe I'm net flat, or my positions are, I don't really feel like I know and I'm comfortable doing a particular thing right now. It's okay to close down your platform. YouTube has some great webinars. Mark Douglas has some great stuff up there on YouTube. If been looking at our Traders Transition Program course, free plug there. Any type of learning, take a trader development day. So you're advancing your trading career. You're learning hopefully some new things or reinforcing some old things. Go to the bookstore, pick up. I know a lot of good books on candlesticks too. Anything by Steve Neeson. Any Steve Neeson fans in here? Oh man, you guys like Mark Douglas, Steve Neeson? This is my kind of audience right here. Okay, so. The classics are classics for a reason. Okay, I know people try to come out with these new things all the time, and some of them are great. But there's a reason a lot of successful traders learn their candlesticks, learn their discipline, and then have gone on to be successful in a whole lot of different things. Also, have a process and have a routine. You can't control the markets, but you can control your day-to-day approach. You can control how you're treating the markets. Have a checklist for getting into a trade. Does anybody else have this for a particular, whether it's one just in general or a strategy, a checklist? And I don't get into the trade unless condition A, B, C, D, whatever is met. That's good. If you don't have that, and if you don't have that and you're struggling to be profitable, I highly recommend that. And be aware of any situations that may impact your trading. Travel, illness. Obviously, we traveled here and there's illness situations going on. But if you're somebody who, maybe you got a sick kid this week, okay, it's okay to scale back a little bit. It's interesting. I've worked with some traders, and guys, I don't want to use this word lightly, but I'm going to use it anyway. You know how addictive trading can be, okay? And I've talked to a lot of traders who do not balance things well. So they have a sick kid, but yet the markets are great. They're trending really well right now. Guess which one of the two gets neglected? And that's not a criticism of any individual party. I mean, you understand what I'm saying, though. It is so, enticing, just, well, especially when you're on a hot streak. You're just like, well, I got to be here. No, you don't. And taking those trader development days and backing off a little bit is highly encouraged. So now a view from the ground. We've talked about the overall trading, so now let's get into a view from the ground. Minimizing mental mistakes. Mistakes can be minimized by trading with confidence in your system, and confidence in your trade management. Well, how do I get confidence? It's like the old adage about how do I make good decisions? By gaining experience. Well, how do I gain experience? Make bad decisions. Okay. Thankfully, I was raised in an environment where, in general, I was allowed to make most of my own decisions. And when I did something not right, it was explained to me. There were consequences, etc. The market should be the same way. If you're consistently making poor decisions, now the market's not going to explain it to you. The people on the other end of your trades aren't going to explain it to you. They're going to encourage you to keep trading. You're doing great. Good job. But that's where you need to step in and say, okay, I need to figure out what's going wrong, and I need to make the adjustments that I need to make. So again, keys to trading with confidence. Putting in the time, the effort in developing your systems, putting in the screen time to get used to managing trades in your system, either on paper or real money. Anybody here into day trading or wants to be into day trading? Okay, there is no more valuable thing for a day trader than screen time. Okay, being in front of your screen, even if you're not confident enough to be trading yet, to be observing the markets and what's going on. There are times I'll be in the room and we'll make a trade, whether it's a day trade or swing trade, and it will meet my systems. It'll meet my checklist. But yet somebody will still say, well, there's 5 like this. How do you know it's this one? Well, sometimes our brains just really pick these patterns out, guys, and I'll tell them, listen, I wish I had a great explanation for you, but the best that I can do is that I've been sitting in front of these screens almost every trading day, almost every trading hour for the last 7 years, and sometimes you just see things. A lot of chess players are like that. Sometimes, other than the savants, the people that have been playing for a long time, they just see things on the board. Okay, and trading can be the same way. There are ways to make your learning process more efficient, but there's no shortcuts. And guys, I get it. I'm on all the marketing email lists that you guys are on. I promise you. Okay. Everyone I'm not even going to ask for a show of hands because I know every hand should go up. We've seen these emails. This one strategy will make you millions. This simple pattern is all you need. And guys, I've yet to find it. I'm not going to call those people liars, but I've yet to find it. But, it's possible they're just way better than I am. It's also possible that, never mind. And remember, guys, everyone's path is different. Day in and day out, everyone has different experiences. Everyone has different life choices that they've made that have brought them to where they are now. And managing expectations, guys. Failure to meet or live up to expectations is one of the biggest reasons for negative emotions in our life. If you have a fight with a friend, a fight with a spouse, or you go through a divorce, you go through a breakup, at the core of almost every one of those problems is that person failed to live up to the expectations that you have of them. Or vice versa. Maybe you failed to live to their expectations. So when we fail to live up to our own expectations, especially in the trading world, we don't make that $1 million in the first year. We don't take the 500 and make it 50,000 in a month. That's where a lot of the mental pain and mental trauma, again, as Mark Douglas talks about, can really come into that. So again, as we evaluate your trading site, first of all, guys, questions. Any questions on anything relating to this so far? I'm sorry, I said I would take some questions. I want to make sure everyone's okay. We all got this. That's great. Okay. So evaluating your trading site. First of all, who keeps a trade journal? Good. Anyone who didn't raise your hand up, please begin keeping a trade journal. And listen, that can be whatever. Again, I do a whole module on that in my course. It can be just a simple Excel spreadsheet. You really don't need to do the Excel spreadsheets because our brokers are pretty good at handling that kind of stuff now. But you've got to be able to know what's working and what's not. If Neil's got 5 strategies and he gets to the end of the year, 4 are profitable and 1 is deep in the red, probably going to rethink that 5th strategy, aren't you? Okay. But you don't know that unless you're tracking. For beginning traders, for anyone within their first 2 years of trading, I think it is mandatory. When I'm doing private coaching with people, if they're not keeping a trade journal, they tell me that right away. I'm gonna say, listen, let's reschedule this for a couple weeks from now. Okay, keep a trade journal for 2 weeks. Here's how you keep it. Get back to me. We'll look at it. Okay, you can record the mental trading mistake you're making. Am I bag holding? Am I chasing? Am I over trading? Is my position size too bad? Those are the things that you keep in a trade journal. I feel, I'm in a swing trade. The end of day one, I'm up. Let's say it's an option. I'm up 20%. Man, I'm feeling great about this trade. Oh, then it was last Monday and the markets are down 1,000 points. I feel bad about this. Again, especially us guy traders, what's the trading diary? No, it's really not. It's a journal. Okay. And I know that, we don't put down our feelings on paper and all that. You got to get over that. Because to be able to zone into that, to me, everyone asks me, I get this question all the time, what's the one thing that turned around your trading? And of course, there's not one thing. There's several things that took me from where I was those first 6 months, where I was, literally punching holes in the walls. That's the second step to becoming a good trader, is finding a good drywall repairman. But where I was literally punching holes in the walls to the point where I'm standing in front of you today with a company that sponsored me to come up here. Okay? And there wasn't one thing. There was a lot of things. But keeping a trade journal and being honest with myself is one of the most important. So are you too far up or too far down? Does that have any effect on your decision making? Plan your trade and trade your plan. In your trade journal, before you make a trade, You should, a swing trade. I know day trades come quick. A swing trade, you should have why am I getting into this trade? Well, I play a pattern called the snapback pattern. I teach it in our room. If it's a snapback trade, I'm going to write that in my trading journal. Snapback trade. I use OneNote, Microsoft OneNote. I just clip the chart right out, boom, put it there. Here's where I am. Here's where I expect it to go. Neil's going to talk about expected move in a few minutes here. But I have that in my journal, and I have my entry point. All of that before I'm in the trade. I don't get in the trade, ooh, I like this click, and then all of a sudden I go back and do my journal. No, I have all of that right away. Entry and exit triggers for all swing trades should be known before entry. Day trades, more general template if necessary. All right, with that, I'm going to turn it back over to Neil, who's going to talk about expected move. We've got a few more slides here, guys, and then we're going to open it up to your questions. So start thinking of them, because that's where we really, kind of shine, is getting into the talking about some of the mental trading stuff.
Okay, so in my trading room, Tradeology, Fifth Insight, trading channel, this is one of the things that we do. As you become a trader and you trade a lot, you start to realize that the markets are very, very, very efficient. And being efficient, there's a calculation that you can look at called expected move. And really that's just what it is when you look at an underlying stock is what's the expected move in the given period of time for the underlying for it to go up or down. So we look at this and we try to set up our trades based on that in our trading room to get the best probability to win. So expected move does not always tell us the direction of the move, but also it's a defined period of time. Like I said before, when you look at your option trades, when we set up our option trades, we look at the expected move and we can play it either up or down, and then we have indicators based on momentum that we look at in our trading room. So expected move is based on volatility and time to expiration. Oh, too many slides here. So when you look at the expected move, it's based on a statistical probability. It's a standard what's called one standard deviation, which is about 68.3%. And this is what it basically, when you look at the expected move, there's a 68.3% chance that it's going to stay in that range, and that's what we try to capitalize on when we make our trades. Using statistics, we have our indicators in our trading room that we use as well, but we try to use these statistical patterns to set up our trades to where the probabilities are on our side. It's kind of like, I always say this is like, if you're an insurance company, you're going to do the calculation of what's the probability of that you're going to win more than you lose. So that's what we do here in my trading channel. Right now, I know there's a lot of people are probably sitting here and they're like, okay, what's a good strategy to use in this market? So we've been doing a lot of different trading strategies. We do back spreads, and essentially we set these trades up to where we actually don't lose on the unintended direction, but we also win and have unlimited upside on the direction we expect it to go. The only way we lose on these trades is if the trade stalls out in a range of the price of the underlying. So probability of money in the money. We also use, there's several things we look at for probability. We look at probability of in the money. We look at probability of touch. When you look at probability of in the money, that's what it is, or that's the probability that the underlying is going to finish in that range at expiration of the option. Probability of touch is what it's going to take for that underlying to go up and touch that price. It could come back down. Generally, the probability of touch is usually double what the probability of in the money. So usually when you set these trades up, many times you're just sitting there waiting for it to touch that price, and then you execute. So we always say in our trading room, this is what I always say, it's kind of like if you were to look at it like a lion, for example. A lion will sit out by the water hole, and it'll sit there and wait for the right time. When there is prey comes up to drink, it'll wait, and then strike. And that's really what we do in our trades. Sometimes we'll get into positions and we'll hold these positions for 30, 40 days, and we'll be losing the whole time, and all of a sudden we'll have a big downturn or upturn, and our trades will suddenly become profitable. So that's what we do. That's how we try to use these probabilities of touch and probabilities of in the money to set up our winning trades. So this is a little slide we put together. So you never know how many opportunities the market will present to you on a given day or week, but you should know what you're going to do with the ones you do see. The market is always changing, so you got to change with the market. You got to learn new strategies. You got to be willing to change your strategy as you move along. So, you know, I know we're all here because we want to learn. We want to learn new strategies. There's a lot of strategies that I teach in my trading room. I know Matt does a bunch of different strategies. And there's, you know, we're always constantly trying new things out. Recently in my trading room, one of the new strategies that we took advantage of, it was on earnings trades when volatility was really low. When the markets were going up and volatility was really low, we did double diagonal trades, and those seemed to work out really well. So with that, Matt's going to talk about our different sessions we have.
All right, so guys, before we kind of open this up to any general questions, anything anybody wants to talk about, if Catch You Can Trade tomorrow, we've got several presentations at 12:25 in the main hall there. I'm going to be talking through 3 of my favorite candlestick patterns. Again, I told you I'm a Neeson disciple, as it were, so I'm going to be going through, well, it's two specific patterns, and one is kind of a combination of patterns that I look for in what I'm doing. At 4 o'clock tomorrow, our president, Sarah Potter, she's going to talk about the benefits of trading futures in this market. And then at 5:15 tomorrow, the two of us and Sarah, we're going to be in a panel. I'm not sure what room that's going to be in, but it's going to be how to choose your trade and risk targets. And that's going to be a panel. That's not going to be any slides or anything like that. So I also want to just talk about, we run weekly live free events every Tuesday night now. Neil's got the next one coming up this Tuesday. I should be shortly after that. Sarah's doing one as well. Every Tuesday night, it's a free event. You go into our website and sign up. We obviously have our daily live trading rooms, courses for traders of all levels, and we are constantly expanding our library there. So we have a Traders Expo 20% discount on my Trader Transition program. It's about 5 hours of video. It's 2 one-on-one coaching sessions with me, access to the private Twitter feed where we put more recent examples, because, you know, we teach the patterns, and then it's a constantly updated Twitter feed where, hey, here's some patterns today, some trade ideas, some analysis, and some stuff there. So that is available. Again, you can just scan the QR codes on your card. So now it's time we open up everything. I'm sorry, go ahead.
One other quick thing I want to add. So we also do a Coach's Corner every single day. It's on YouTube. We usually do like a little 5-minute segment. We kind of talk about the market. Those don't cost anything. Feel free to check that out. And then one other thing I forgot to mention. So we're a little different than a lot of the other services out there in that we're focused more on coaching and teaching people how to trade, not just go in there and, you know, here's a trade. You can, you know, we demonstrate trades that you guys can follow along, but the goal, what we're trying to get across is we're trying to build a community of people, like-minded people that want to trade, and also get to a point to where you can go out there, find your own trades, and be successful, and not have to rely upon us or anybody. And maybe someday you'll be standing up here and you'll be a professional trader. Who knows?
All right, so questions, guys. Anything you want to, any general questions, anything about specifics, what we've talked about, trading psychology, trading patterns, general philosophies, meaning of life? Well, I'll take a stab at it. It's not going to be pretty, but be like my first 2 or 3 months of trading. Yes?
So my biggest problem in day trading futures is revenge trading.
Ah ha ha ha.
Because my system has an 80% winning probability. I follow my system.
Mm-hmm.
But when I lose that one, it kind of, you know, like hurts my ego so much that I revenge trade and or trade more than I should.
Okay, so the question was about revenge trading, and specifically, I'm assuming how to kind of get over that. Well, first of all, you know, it's interesting. We've all heard the expression, the market is always right, okay? I dispute that. The market isn't right or wrong. The market's not. The market's just a collection of the traders. It's all of us in this room, millions of people around the world, all the big funds that are moving money around. So to ascribe some sort of human emotion or human tendency to the market it's not. I don't validate that. Now, as far as the revenge trading, the thing is, there's one thing we'll say is there's always another trade, because revenge trading and chasing are actually very interlinked. Okay, there's going to be a trade for you tomorrow. I'm not saying you take it or not, but there's going to be a trade tomorrow. There's going to be a trade the next day. There's probably going to be 10 trades after that, 1,000. I mean, there's literally millions of trades you can make every day. So again, the revenge trade is, well, I have to be in the next one because this one just messed me up. Okay. If you ever, again, I do the post-its on the monitor. That's what I did for chasing. I said, don't chase, post it up there. So I see it right there. And it's just, it's a problem because you're bringing it up. So I wish I could give you a little better answer, just stop doing it. But it really is. When you know it's coming, you're about to do it. We've all been there. We know we're about to chase or whatever. You need to step back and do a lap around the house or lap around your house or walk a lap around the block and just come back and say, okay, I didn't do that. At some point, you're going to do it. Then the next time you don't, then you don't do it again, then you don't do it again. And it's just repetition. It's what do they say? Do something for 21 days and it's a habit. So do something like, if you can make it a few trades without revenge trading, and again, keeping a trade journal is very important too. You can take a big red thing and write revenge trade on there. And then when you go back and you review it at the end of the day, at the end of the week, you'll know. Yes, sir.
Do you have a specific trading platform you prefer?
I got to be careful how I answer this because I work for one. So let me just say, and this is an honest answer to this. I think any of the major ones, I don't think you can go wrong with. It depends on your strategy. Some are going to have different tools than others. I have used almost every major one. And I use what I use, and yeah, I think that's technically the answer I have to give, but go ahead.
Let me talk to this a little bit too. So I think when you talk trading platforms, there are specific things that each one does really well. There's really no one trading platform that does it all really well. So there's some that have payoff diagrams that are really well. There's some that are easier to code indicators. I myself kind of use a variety. I have a core one that I use most of the time in my trading room, but I also branch off and use other ones because there's different tools for each one.
Yes, sir.
Tesla as the example, everything is pointing at it's going to eventually go higher. This past month it went down to 611. One of them now is about 700. What are the things that you would look at to see if you would be able to make a personal guesstimate that it would go back down to 611 within another month?
Well, I'll let him talk about expected moves. I'll talk specifically about Tesla. The way that I've had success with Tesla is just day trading the stock itself. I do not hold Tesla overnight. That's just I'm not saying that you can't be successful doing that. That's just my personal preference. Because there's people that do. I literally know a trader who trades Tesla, Apple, and Netflix, and those are the only three stocks he trades. He day and swing trades them, and he makes a ton of money on it. So.
I got rid of them all this time, so I'm wondering when to get back in now. This is my fourth time going back to them, and I saw that number, and I'm waiting to see the information that might guide me to back to that again. Then it keeps going back up, so you can do the day buy and sell every single day.
Yeah. Yeah, and you want to?
Yeah. Let me. So Tesla's a really tough one because I think it was a few weeks ago. It had 3 100-point moves in 3 consecutive days. This probably might be 3 or 4 weeks ago, and it actually blew the expected move out of the water. I mean, completely blew it out. The way I approach those types of underlines, and this I kind of alluded to it a little bit, is I try to set up back spreads where I'll sell an option, either a call or put, depending on the direction, right at the money, and then I'll buy 2 options of the same option that equal the amount that I sold the original option for, or maybe for a small credit. That way, if Tesla, because Tesla's a pretty unexpected, I mean, you really don't know where it's going to go. I mean, this thing, it could go up, down, who knows? It could go 100 points, it could drop 5. You never really know. So I set up trades, especially for underlines like that move very quickly. I try to set up trades where if I'm wrong, I still get a small credit. If I'm right, using a back spread, or there's another trade I do. It's a custom trade where I'll actually sell or actually buy 3 either puts or calls, and then I sell an option above it and below it, and it creates a similar back spread payoff diagram. But you get unlimited upside, and you get a small credit on the downside. The only way you lose is if it kind of stalls out. Where with Tesla, it's so volatile, it goes up and down. That's the perfect play for that type of underlying. And actually, with the market moving 900 points up, 900 points down, these are the types of trades right now that are really, really good to do. So I hope that answers your question. But that's how I would do it.
How much value should I put into stock going down because Elon had said the coronavirus is a joke in response to the market numbers, and then the unannounced factory people got hurt or weren't documented?
Yeah, that's it. Well, there's 2 separate questions there, and let me try to answer both of them. First, Elon. Okay. I don't want to say much about Elon because he'll sue me, even though he doesn't know who I am, and I can't sue him back apparently. So, one of the things that I've just gone to day trading Tesla on, again, because I had a similar situation to you. I think I had 3 or 4 losing trades in a row on that swing trades. And to me, at that point, that's enough. If I have 2 in a row on a particular underlying, I won't touch it for months. Like, that's just, again, we talk about revenge trading. We talk about, some of those mental trading things. I would always go back to things early on and say, oh, well, this one owes me. So I made that adjustment that I only really day trade Tesla now. But again, one of the things that I don't like about Tesla swing trade is exactly what you said. Who knows what's going to happen with Tesla tomorrow? And it is a little bit of a cult stock in terms, especially for a long time when their financials were just garbage. And so they're sitting there, the stock doubling every 6, 8, 10 months when they're not, they're losing money hand over fist for a while there. I mean, they may have a nice path forward profitability wise, but at the same time, to me, I can look at this whole landscape of stocks that are out there. And this particular one has a CEO who's unorthodox, let's put it that way, rather than using a less than flattering word. He's very unorthodox in how he communicates. So for me, I have about 1,000 other stocks that aren't like that. So, and I'm not saying don't trade Tesla. I'm not saying to trade it or not to trade it. I'm just saying I'm looking at this vast landscape, and you'll see on when I'm in my room, my master watch list, and it changes, but it doesn't really have more than about 100, 125 names on it at any given time, because if there's something going on, there's maybe a nice trend I can catch. Whereas with Tesla, other than doing some early morning, first hour day trading when it's hitting like some support resistance pivot levels on the hourly, why am I going to go through that headache, So it's sexy. I get it. Tesla is, you want to go to the, I'm not saying you. I would like to go to the bar at night with some buddies and say, man, I made $500 on Tesla today. Oh yeah, the one with Musk, right? Yeah. We're like this. We're buddies. No, I mean, so I have so many options that aren't like that. So why would I, bang my head against the wall, or fist in some cases? So yeah, that's my best answer to that, and just sort of a general, again, view from the air question. So hope that helps. I know it's not okay, no problem. Anything else, guys? Yes, sir.
Can you explain the back spread one more time?
The back spread. So typically what I do, so let's say, let's give an example here. Let's say we were trading, let's just call it You Can Trade stock. I'll just call it You Can Trade. It's trading at $100 a share. And we thought it was going to, we wanted to play it so it went down. We would actually sell a at the money $100 put option. And let's just say that's $10. I'm trying to make this easy. And then we would go down strikes further out of the money to where we found one that 2 of them would equal that one $10 option. Maybe it's 5 strikes, maybe it's 7, I don't know. Or maybe a small credit. I like to do a little bit of a small credit. That way, if you're wrong, you still get the small credit. If you're right, you still get the unlimited upside. The only way you lose is if you end up in an underline that's really slow moving, and it really has to make a big move. So I usually do these in our trading rooms. We do them 100, maybe 200 days out sometimes. So we get lots of time for that probability of touch and probabilities to move in our direction. Does that answer your question?
Yeah.
Okay.
Sir, at your current, let's say, I would like to know, at your current stage or level of experience,
Well, first of all, I don't trade other people's money. I only trade my own. I would never trade other people's money. I've had some friends that I grew up with that were pretty successful. And I've also had some business colleagues that were pretty successful, and they've offered me to go trade for them with their money, and I've always declined just because I feel like if I were to lose, I would feel terrible, for one. But for two, I've had friends where I've given them advice and they've gone and actually traded. One good example is it was Alibaba when it came out as an IPO. I told one of my best friends that I grew up, I said, look, buy the stock, hold on to it for 15 years, you'll make money on it. I promise you, you'll make money. But there might be a time where you lose, but hold on to it for 15 years and you will win money. We got into the thing, it went up to about 119 and then shot all the way down to like 50 or 60, and he was blaming me for the bad advice, and he actually sold. And now if you look at Alibaba, it's much higher than what he sold at, and he actually took a loss, and he to this day he still blames that on me. So I don't really trade other people's money. I trade mine. But for me, it's all systematic. I take the emotion out. Like when I used to code programs, it's very programmatic. It's a system. It's a cycle. We had a question about revenge trading. I don't really get into that. I know some people that gamble, they do the martingale. You lose one, then you double, then you double, then you double. You do that in this game, you got to have you got to lose your memory really quick in this, because if you sit there and try to revenge trade and make up for your losses, you could end up really, really hurting yourself. So I don't know if that answers your question.
Yeah, I'll add on to that. Neil just gave a great example of why I never talk stocks with my friends, ever, or make any sort of advice or recommendation. In fact, we have to say when we go in our room, we're not financial advisors. We do trade our own money. I mean, we're actually contractually we do. I don't speak for other places, so I don't know what they do. I know for a fact there's some that trade like business accounts for whatever company they're working for. So you're right, there's not that skin in the game, and those people I think don't always have an authority to then go tell people how to trade their own money. Everybody you can trade. We have a track record going back in most cases years, some decades, of having a level of success in personal accounts. What you see me trade in obviously Monday, we're going to be here. Tuesday morning when I go into the trading room and I put my screen up, I got it set up so you can't see account numbers and all that. That's my personal account. So every emotion that I deal with, and I wish I could be as robotic as Neil was sometimes. That's why we're very different creatures. Maybe it's the 14 kids, but my emotions are a little more probably closer to some of your kids than yours. But so going through that and experiencing those emotions, we've been there. So I hope that answers your question. Anything else? Yes, sir. The best ways to regain confidence, we touched on this a little bit, is repetition. Okay, why would the next time I take a trade, and I use the snapback as an example. So the next time I take a snapback trade, okay, do I know for a fact it's going to work? Of course not. There's no guarantees. There's never any guarantees. But I've traded, that is the pattern I've traded, or some variation of it, the most in my entire career. It's one I have a very good success rate with. So when I get into that, even if it goes a little bit against me to begin, because that's where we have problems, right? We get into a trade and it goes a little bit against us. Maybe it hasn't broken support yet or resistance if we're short, but it goes a little bit against us. So we immediately panic and get out, okay? I hang in there at least until my rules tell me not to, because I've been through this enough. Sometimes it's just repetition. I'm a baseball guy. Baseball guys. What are the baseball players doing right now? They're in spring training. Okay, I know they're playing games now. 2 weeks ago, all they were doing is hitting off a tee. Again, guys making $30 million a year to play a game, and they're darn good at it. They're hitting off a tee. It's that repetition. That's why they have confidence when they step in there. Doesn't mean they're going to hit a home run. They may strike out. But to get your confidence, a lot of it is, obviously it's up here. So for me, I have confidence in my systems because I've been trading them for years. I've put in the time and the effort, and most importantly, I've paper traded each one of them. Every swing trading system that I regularly trade, I probably spent at least 6 months, if not more, paper trading it, and then eased into real money trading. So does that help?
Yes, thank you.
Yeah. Yes, sir.
So do you also ease your sizing
Yes, yes, absolutely. I did. I did. We do not, one of the things we don't do in the room is we don't put, I trade options exclusively, at least swing trade in the room. We don't put position sizes out there. And again, part of that is a legal issue because of who we work for. And part of it is, I would probably do that regardless just because, now I could, when I'm working with somebody individually, I can't specifically say, hey, here's your account size, here's how many contracts you should be trading. But we can give some general guidelines. I'll just say, let me be a little hypothetical for a situation. Let's say I am a confident trader. I'm me, and I'm trading a $25,000 account. You're probably going to see me taking, probably 5 to 7 contracts on most things, and that's a little on the high side, I know, at least for some people. But again, with my experience, that's probably where I'm going to be at with that. Me personally, again, we're getting into some issues I gotta be careful with. But me personally, if I'm working with somebody, I would probably tell them start with 1. And when you have a track record of success, going back to the confidence issue, then move up, okay? And gradually, as your account increases, increase that size. And if you hit a cold streak, back it off. Like I'll tell people when they're day trading, when I'm working with day traders, start with, and most of the stocks I trade are a little higher priced. Like I love to day trade Tesla and Netflix. Those are the ones when I can see a setup there. If somebody I'll tell them trade a share. I know you probably you won't make enough even to cover your commissions when we still had commissions, but that's not the point. To ease in from the paper trading to the live money trading and easing into a point where you're comfortable. And if you put your head on the pillow at night, and listen guys, I know these last 2 weeks have been crazy, but you put your head on the pillow at night, you can't sleep because of your position sizing, I'll tell you right now, it's too big. Whatever it may be.
Yeah, so let me talk a little bit to this because I'm a little different than him. So I think position sizing is very important. I always teach the number one most important thing when trading is your trade strategy, then position sizing, and then your directional bias. Most people think, is it going to go up or down? What's your directional bias? That's actually the least important to me. Position sizing is number 2. I can't really, like Matt said, we do demonstration accounts. We don't really show how many different number we put on as far as our positions. But what I personally do is I try to make sure I don't blow up my account. I never put on more than 3 to 4% of my total account value on any one given position.
I want to clarify there. We trade real money accounts, but it's a demonstration of a trade. So somebody said, well, you sim trade. No, and you can see when we put our trades on, we're trading. It's live real money. So I want to clarify that. I want to make sure there was no misconception there. Yes.
How do you deal with overconfidence? You have too many green streaks.
Okay. That's a great problem to have, by the way.
Yeah, and you have like that state of Korea. What do you do? What do I tell them to do? You take shares and take shares?
Yeah. Here's the thing. I've worked with a lot of traders over the years, and I've seen a lot of examples. I wouldn't worry too much about overconfidence because I think if you hit a point where you're overconfident, the market will take care of you. I mean, I'm not trying to make light or make funny. I just think, if you're really, whether it's you, me, him, whatever, we're really that good, there's nothing wrong with being confident. I would hesitate to get into something like with an overconfidence because I think if somebody is cocky without reason to be, the market will humble them.
Don't blow up your account.
Yeah, and don't blow up your account. But I actually think that's kind of a tricky question because I'll be honest, I don't think I've ever fielded that one before. I have too much confidence. If your confidence is misplaced, obviously that's a problem. If you're on a hot streak, that's great. Like I wouldn't say like double or triple your position sizes into a hot streak, but keep riding that hot streak until I went one in January. We were 20-something swing trades in a row without a loss. Well, guess what happened in that first loss? I got kicked in the teeth in 24 hours. So, now granted, I've been through the ringer enough that I knew that was going to happen at some point. And so there wasn't an overconfidence issue, but yeah.
Mainly you guys trade large caps.
I predominantly large cap options, and I typically have a directional bias, whereas Neil is a little more, as he said, probability based. He does some spreads and back spreads and stuff. We're not in the same room. We have separate channels on the site. So,
just to clarify, so I do mostly, I try to stick to ETFs, except for earnings season. I tend to do earnings trades on whatever underlying that has a lot of volume in it. So that's what I tend to do.
All right, anything else? Okay, well, for those of you that hung in here, I really appreciate it. We'll be around here for a few more minutes if anyone has questions they're not comfortable asking in front of everybody. Other than that, you've got our cards. Feel free to reach out via email or to check out any of the promotions we have. I really appreciate you kind of being a part of this first You Can Trade venture into the Traders Expo. Again, we got some events going on tomorrow, and we hope to see you around there. If you see us walking around, we're at the table tomorrow. Stop by and say hello. So thanks, guys.
Thank you.